Good day. Ira Epstein of Linn & Associates with your metal market wrap-up for this Tuesday, the 13th of April, 2021. Time right now about 6:45 p.m. Central Time. So as we look, the gold market back into the 1750 area. Silver had a big gain today. Copper market sitting here comfortably at the 404 area for the moment. Dollar index got hit again at the expense of driving the euro up, which is now approaching the 120 level. You know, we were just at 117, so that's quite a comeback. Up a bit here in the energy markets today. Market likes that. And we had the CPI numbers. And, you know, we were looking for an increase and we got it. And yet the market saw what? The bonds and notes give up yield, a lot of yield. We're back to the 1.6 area, in fact, in the 10-year. That's very important. And the market, I think, told you a story today that, number one, it's not too scared just yet of inflation. It's here, we knew it was coming, and the market absorbed it rather well. That brought about gold and silver because once they, I think, saw that bonds and notes weren't rallying off that news, in other words, weren't creating higher yield, not that the futures weren't rallying, but the yield wasn't going up, they had a clear path and they took off to the upside. Now we get the earnings starting tomorrow, so we get all the banks starting to come in, the big boys and so on. That will impact the stock market. And Bitcoin, yeah, that's not a misprint, $64,000 a coin. Now there is a new contract coming in May, and it's a mini Bitcoin. It's 1/10 the size of this contract. So I think this is basically five coins. So that's what, $320,000 roughly, something like that. So it'll be a $32,000 contract, and everything trades a tenth. That should gather a lot of interest from the public. All right. So let's take a look, if we could, at the chart action. You're still under the 18-week moving average of closes. That number 1793.10. Be interesting if you can get up to it, but it is a resistance point on the chart. If we take a look at the action here, I've had people write me about inverted head and shoulders and so on. Well, you have the makings of one here. See, that's a pretty clear shoulder. That's a pretty clear shoulder. And that's a head. So you come like that, and if you picked it up and you dragged it over, as I said, that 1820 area could be it. The same person asked me, how come I never flip them the other way? Just because I don't have the pattern. It's not that it's not there. That's not the pattern right now. Is this a classic one? Well, it's clear. Let's put it that way. Classic would be without that so much, that it came down like that there and then took off. Do I put a lot of credence on them? I frankly don't. I like my other work better, but I'm aware of chart patterns, and I always have been because the public likes them, and you should always know what they're looking at. Now, yesterday was a bad day for this market. Yesterday, the market took out this break low. So you broke the pattern where you were trying to have higher lows, higher highs. That fell to the wayside. Then you followed through yesterday, as you can see, to the down. Today you came snapping back after making a lower low. So as I'm looking at the chart, when I put the swing line on it, it's certainly not a crystal clear inverted head and shoulder. You can see that. You got that high there and there. I like them closer than that, but you don't have to split hairs. It's just a chart pattern. I don't know how to repeat that more times than that. But what's the story the market threw out today? And let me show you with what I think. The market is now saying it wants to play at this number. Again, it started at sort of at there, and it's making that statement. It doesn't want to get too far away just yet. You see that we had an outside day to the upside today. If that low is taken out, where might the market go? Well, if you take that low out, the lower Bollinger Band at 1701 becomes the target. Don't take it out, what's the upside target the market might decide to make a run to? 1764. Where's the momentum? Well, you have a market that is overbought. Both numbers are not yet going sideways over 80. They could establish the first day of doing that tomorrow. And if that set in and became embedded, which it hasn't done. You haven't had these numbers try to embed in months. Do I have any back here? No. You have to go way back on the chart. You haven't had one of those. You've had bearish embedded readings, not bullish. That would be a whole change of the market's character. but you're not there yet. You're still in a market that's doing this, the waves like that, and chopping itself up and down against that 18-day average. When it trends, I'll tell you, I'm not seeing it just yet. Gold-silver ratio, when it was up here, I said, it wouldn't surprise me if we made a challenge of this 18-day moving average of closes. You're there. In fact, if anything, you're under it. You're at 68.73, 68.69, 68.89. What does that mean? It means that silver is now starting to gain on the gold market. Now, in real bull markets, when you get them in the metal, silver's not left behind. Actually, what happens in a real bull market, all the other metals come alive. Silver's one of the leaders, and gold's a bit of a laggard. Not unusual in historic markets if you go back and you look at them. Where's the battleground? Look at the 200-day average, this gray line right here. Look at the 18. Notice how the market's fighting it, just like that. The same pattern is the gold. Higher high, lower low. Overbought, similar to gold. A wide trading range between the upper and lower Bollinger Bands. Not certain what it wants to do there. Copper market's more of that sideways action, and all I keep reading about now is the bear news in copper. Shanghai stocks are large. China's banks don't want to lend as much money now. Blah, blah, blah. Their factory lines, if you're looking at their numbers, they're excellent, but they're not as big as they thought they were going to be in their export business. So you can go on and on. Yet the market's just sort of sitting here. I'm also hearing the stories, as you probably did if you watched financial TV, of lack of the super cycle. I don't know. I call that consolidation. This was a market that was 260. Getting up to $4 and not running anymore is just holding on to that doubling of price. Well, not doubling, but 50% increase in the price. That's what I'm looking at. We'll see. When you get to the platinum market, you broke through this low. So now what you have is the higher high, a lower low, an oversold market caught within the confines of the Bollinger Band. So we weren't too far off that I thought that was going to happen. Within days, I expect to see the 18-day average hit again. If you fall hard here, well, 1141.40 to 1128 is pretty stiff support in a market that's already oversold. But I'm not looking for a trend to develop anytime soon. The strength of the market is still the palladium. It is trying to get up to an all-time high again. It is overbought. It's in a resistance area. Don't you find it amazing when you get these rallies, how the markets try to stop against Bollinger Bands on the upside or downside? That's what I did that course about. I mean, it's so important to understand the use of the Bollinger Band and how it's utilized. And if you think that the algorithm traders haven't programmed it in, I think you're very wrong. There's a reason that it pays attention to these numbers and stops at it. They just don't magically appear to stop for those reasons. There are other elements at work here. When we come to the dollar index, once you latched on to that trade and let go and started these waves down, I frankly thought the dollar was going to hold up better. It hasn't. A likely target is 91.58. You had an outside day down today. So if today's high is taken out on Wednesday or Thursday, it's a pretty good indicator that the market's going to spend time fighting in this whole area. If not, obviously, then you're looking at some lower prices. Do I think you're attracting a lot of new short selling? The answer is no, because you're oversold. But it's a heck of a break. You're down almost 2 cents there. That's a lot in that market. In the Ethereum, you can see that you've got the embedded reading. It's a running market to the upside. Coinbase comes out tomorrow on the NASDAQ. I understand they're pricing it at $250 a share, but it gives that whole idea of these markets that, hey, there's some legitimacy to their being around, in the sense that they get a public offering going on an exchange that trades in them, all right? These are still big question marks that people have, but you can't deny it. It's become an asset class. You may not like it. You may not think it'll last. That's up to you. Others think that it's here to stay and it's going to only get bigger. I see that too. I understand the argument. I was not a person that thought at first it would be as popular as it was. Otherwise, I'd have loaded up a Bitcoin at $5 and I'd be the richest guy around. I didn't do that, obviously. So, as I said, you always watch Bollinger Bands, and with that, take a look here. I think you'll find my course on this something you've never seen, easy to understand, 13 videos. Take a 1-minute look at it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.